On this day, Fiserv dropped its third quarter earnings report. And what happened next? Well, the market's reaction was nothing short of historic and unbelievably brutal. The stock absolutely cratered. It dropped as much as 44%. This is the tech, the plumbing, for thousands of banks and literally millions of businesses. You know, when you swipe your credit card or check your bank balance on an app? Yeah, there's a really good chance Fiserv is the one making that happen behind the scenes. Missing revenue by over 8% and earnings by almost 23%? For a company this big, that is a 5-alarm fire. The company didn't just lower its guidance, it completely obliterated its own full-year forecast, slashing growth from 10% all the way down to around 3.5%. That just shattered their credibility. In this moment of, frankly, rare and brutal honesty, the new CEO, Mike Lyons, basically came out and said, yeah, we did this to ourselves. So, you see, the collapse wasn't just one thing. It was this toxic cocktail of 4 really deep-seated problems. You had a culture of short-term thinking, a dangerous reliance on unstable growth, nagging problems from a huge merger, and, to top it all off, serious allegations about its star growth product, Clover. Okay, so the company is in a full-blown crisis. What do you do? Well, Fiserv went for a complete overhaul of its leadership and strategy. This is their big bet, their gambit on a comeback. Management rolled out this One Fiserv plan. Now, I know this can look like a bunch of corporate buzzwords, but each one of these points is a direct response to one of those root causes we just talked about. It's a 5-point, back-to-basics reset. They're trying to fix the fundamentals they ignored for so long while chasing the short-term wins. And to pull this off, they brought in a whole new best-in-class leadership team. And they weren't just playing musical chairs. They went out and poached their direct competitor's CFO to fix their forecasting mess. They hired a renowned expert from Stripe and GM to fix their core banking business. And they brought in financial heavyweights to oversee the whole thing from the board. And this is really why this story is so fascinating from an investment angle. You have 2 completely opposite takes on the company's future. The bulls? They see a wounded giant that's on sale, a great company at a bargain price. They're betting the new team and the strong core business will fuel a recovery. But the bears? They see a company with deep cultural rot, and they're warning that competitors are going to eat Fiserv's lunch while it's busy trying to fix itself. You can see analysts have pretty much mapped out these futures, and man, the range of possible outcomes is just massive. If the turnaround fails, the stock could basically just stay where it is. But if this new team pulls it off perfectly, the upside could be huge. The whole investment case has shifted. It's not about their market position anymore. It's a straight-up bet on these new people.